Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do another prediction video.
These are not our predictions. These are other people's predictions. These are people who are smarter than we are, more well paid than we are, and have greater reach than we do. However, we are going to tell you what they say and then maybe give you a little of our thoughts on the matter.
Okay, they may have more reach, but I will bet they are not higher paid than we are, and I will bet they are not smarter than we are.
Okay.
So here's the headline of the article. Here are the top experts' biggest predictions for the U.S. housing market 2024. Now, a lot of these companies, these experts are just the person they've hired to basically be their spokesperson for whatever a bunch of analysts come up with.
Right, but what I'm saying is, by that means that it took a whole bunch of people to come up with this prediction, and when you're calculating the salary of all these people, it's more than us. But anyway, right. That's not important. Let's get on with it.
Right, but the idea is that they don't speak, because we've read articles where the same institution will have like two different predictions, right? Because it's maybe they talked to somebody else there or whatever.
Right.
Okay, so what's interesting about these, I think, is that they change rather rapidly. So here's the first one we're going to talk about. This was Realtor.com. Their prediction would 2024 would be a bit of a break. Break from what? Okay, it's a break from 2023, that's for sure. All right, this is what they said: as the Fed turns dovish, the 30-year fixed mortgage rate will average 6.8% next year. Realtor.com predicted early December. Now, it says here in the last week of the month, the rates led to 6.61. Early December, rates were still like almost 7.5%. Mm-hmm. Like, they were still pretty high. So to them, they're like, yeah, if the Fed has a couple drops, rates will fall to 6.8, but they're already below that.
Right.
So their kind of predictions already, unless they're predicting rates will go up as the Fed drops rates, which doesn't make any sense. Right?
Right.
Because I think what this is pricing in is this two rate cuts or three rate cuts, right? Mm-hmm. This could have the effect of slowing demand as home buyers feel less pressure to race against higher borrowing costs. The listing agency expects prices to dip by 1.7%, having risen 3% in 2023. Now, Realtor.com is not a listing agency. Mm-hmm. They're actually not even a real estate brokerage. Mm-hmm. They are just a website that takes realtors' listings. They're not even owned by the realtors, so they're not owned by NAR. Mm-mm. They're owned by a third party. And all they do is we give them our data to put out there because we actually show up as a listing agent on those listings, right? For the most part, right? Okay, I thought this was very interesting. They also said they expect prices dip by 1.7%, but it's kind of counterintuitive. We had prices going up with interest rates in the high 7s, and now the interest rates are in the mid 6s. That's going to cause prices to dip. That doesn't make any sense.
Right. And then they're saying that there are going to be less transactions with lower interest rates. That doesn't make sense either.
Here's another one. It will be a bit of a break after what have been pretty relentless home price increases. Chief economist Danielle Hale said, adding, some of the pressure and sense of urgency will start to let up. Is this the urgency for sellers? Is this the urgency for buyers? Maybe as long as people don't think home prices will, or if interest rates will keep going up, they were rushing in to buy. Maybe people will wait thinking they'll fall, but that's kind of a double-edged sword. Why is waiting a year? We had somebody come on the channel and said, should I buy now 75% and then pay out the whole thing off in 10 months, or should I just pay cash in a year? Actually, you should wait a year and pay cash, because if you get a loan, first of all, you're going to have a little more pricing advantage, when you buy the house, if you say you're paying cash, than if you're getting a loan. Mm-hmm. And the other thing is prices probably won't change that much in a year. But the most important thing is when you originate the loan, there are going to be fees associated with that. So now you're betting, do home prices go up enough to cover the fees I would pay? If you're putting a lot of money down, I would not be waiting to see what happens. Mm-hmm. If you're waiting for the big housing crash, I think that's a bad thing. This was the next interesting quote. However, the volume of existing homes for sale will tumble 14%.
Okay, so this is the number of transactions that they see being down 14%. Now, 2023 was a year of very low number of transactions. So if they think that it's going to be 14% lower than 2023, then I'm really at a loss as to why the reason that would be, because it's reasonable to think that with interest rates moderating and being below 7, possibly even below 6.5, maybe even touching 6, then we can certainly see why people would come in and buy that maybe couldn't or wouldn't buy before. So I don't know that I can get behind having less transactions than last year unless they're saying that we're going to have less sellers than last year. And I would question that too, because sellers can only stay out of the game for so long, and then they get to a point where they have to get on with life.
The problem is, if the sellers are selling not to time the market but to buy, they're dropping a house inventory and then they're taking one out.
Right.
So maybe in the same market, most in the same market, some will be transitioning from different markets.
Right, but that means that you're going to have two different transactions. So the idea that we're going to have less transactions in 2024 than 2023 to me doesn't make sense.
Doesn't make sense. I agree. Actually, almost every prediction is we'll have more home sales. We had about 4.1 million, which is super low. A normal year we have 5.5 or so million homes sell, 5.5, but 6 or 4 is super low. To think that we have 15% less than that, that's 600,000. Mm-hmm. That means we only have 3.4 million homes sold. I don't agree with that. Okay. Goldman Sachs, inventory picks up. Goldman Sachs estimates existing sales will only dip slightly in 2024 before rebounding to 4.2 million the year after. So they're also predicting that. But inventory will increase, but sales will drop. Meanwhile, new home sales will climb from 680 to 723. Mm-hmm. So why would people rush to, I mean, that's not very many. 680 to 723 is only 40,000. It's 43,000 more homes. That's basically, if you spread that in all the markets, it's like 100 homes. It's like it's like one sale every 3 days in a large market. Mm-hmm. It's not a significant amount nationwide.
Right.
The number we need to sell is 1 million a year to keep up with.
That's new construction, yes.
New construction, to keep up with the houses that are being destroyed, or the growth of the country, household formations, all that, right?
Mm-hmm. Yep.
So you think that's kind of, I think we're going to find out the end of the year. I think we're going to be closer to maybe 4.5. This 4.24 only happens, or this below 4 is if we don't have enough inventory.
Right.
Right?
Right.
Okay. All right. Redfin.
Mm-hmm.
Prices will fall 1%. This is funny. The 30-year mortgage rate will average 6.6 by the end of 24. It's already there. Okay? Leading to a 1% drop in home prices, the real estate firm predicts. Didn't the CEO of Redfin, what was his he said something in October, just 3 months ago.
I thought he said the home prices were going to go up.
He said the prices were rock bottom. They're the lowest they were going to be.
Yeah.
If you were going to buy a house, you better buy it now. We did a video about that, remember? He said that it's the lowest prices are going to be. They're never going to get this low again.
Right.
They're only going to go up from here. And now they're saying prices will fall 1%, based on 6.6%. Well, interest rates this 2023 were more than 6.6, but home prices went up, right?
Yeah. Well, anytime somebody talks about absolutes, I kind of take that with a grain of salt.
Here's another one. Home prices will still be out of reach for many Americans, but any break in the affordability crisis is a welcome development nonetheless. Chief economist Daryl Fairweather said, I think this is Redfin. Meanwhile, home sales will jump 5%, reaching 4.3 million. Still, Redfin says high costs will push rent demand higher, while there could be an uptick in priced out Americans moving in with their parents. So Redfin's saying that there will be a 1% drop in home prices, that the number of homes will go up, though, 5%. There'll be 5% more homes sold, 4.3 million.
Okay.
I don't know. Those are super benign. Like, all these predictions are kind of, it's like betting on the tie. It's like you don't want to bet on the over or the under. You're just kind of betting on the middle. Like, yeah, we're not really sure. That's what it says to me, is nobody's really sure.
Well, of course nobody's really sure, because everybody's just taking a swag at it. The difference is that these people are hiding behind the names of companies, and we're actually out there with our own names putting something out there. I mean, you and I have been very clear on this. We are expecting 2024 to be more transactions, and we are expecting prices to not go through the roof, but we are expecting prices to go up because interest rates have come down a bit, and that's going to get more buyers and more sellers out there doing transactions, and it's going to mean more multiple offers. And when we have multiple offers, we tend to have higher sale prices.
And for the people who think that the economy, I have seen people in the comments talk about this will be the largest depression since the Great, like everyone will be out of work, nobody will be able to afford their house, everyone has to get rid of their houses. Everyone that owns a house right now either owns it free and clear or has a ridiculously low interest rate, except for maybe 2 or 3% of the people. No one is getting rid of those homes because they lose their job, because what would they do? Go rent and pay even more? It doesn't make any sense.
No, well, it doesn't make any sense. And we've talked about this a lot before, where I've said that, the idea that we're going to have foreclosures the way we did during the great financial crisis is not in the cards. The government has learned from that. Banks have learned from that. Consumers have learned from that. And things are different today than they were then. First of all, it takes, depending on where you are, anywhere from a couple years to 5 years to foreclose. During that time, clearly, you're going to be getting another job and make good on the loan or figure out some other arrangement. So it's not 2008, guys. We just can't make those same assumptions. Things have changed, and they've changed for the better for homeowners. Homeowners are having a much easier time staying in their homes. Banks are much more willing to work with them. So the idea that we're going to have all these people who are going to get foreclosed or who are going to have to do short sales and that sort of thing, it's not 2008. It's not the same thing.
The worst thing that could happen for the housing market next year is a booming economy with high interest rates. The best thing that could happen is a terrible economy and the interest rates tank, because the interest rate is a greater impact than 2% of people having jobs or not, because the 2% of people doesn't move the needle in the real estate market.
Right.
Because remember, we've already talked about this. We have 37% of people say they want to buy a house next year, and there's only like 4% or 3% are actually going to be able to do that.
Right.
So you have all these people who aren't going to be able to buy anyway. Here's Zillow. Zillow prices will flatten. Buyers shouldn't expect home prices to fall much, but the rate of growth will level off and allow Americans' incomes to catch up. The real estate platform predicted a late November note. One, how does Zillow make all of its money?
Zillow makes its money from real estate agents.
But what do they do? Like, how do they do that?
So Zillow sells your information to real estate agents who then proceed to pay Zillow a lot of money for your information so they can call you.
You're a lead. When you go on Zillow and you put any information in there,
you are a product.
You are the product. If you if you register your house, you are the product. Anything you do with Zillow or Redfin, as soon as you go in there, you are the product that they sell to agents.
Right. So
and the agents pay a lot of money.
Anytime you put your name, phone number, address into anything, you are the product, because then you are being sold to.
Yeah. Fannie Mae, price growth will lose steam. They have been the highest, most.
They've been most reliable.
They've been reliable, but they've also been pretty optimistic. They said mortgage rates average 6.7% in 2024, not far off levels seen this summer. We're already there. The government-sponsored mortgage finance agency predicted. So they would not. They just said that growth would lose steam, but didn't really say anything more about that.
Right. So I mean, we're not saying that we're going to have runaway home price increases. All we're saying that in certain markets that are very desirable, we are going to have more activity than in other markets, and that real estate, depending on your market, is going to be anywhere between par to multiple offers and higher prices. And that's really, what always happens. But in particular, in environments such as this, where people have been sitting on the fence for a long time, there's a lot of pent-up demand. Interest rates are going down. People are getting more courageous, and sellers are getting more motivated to either put their home on the market or go out there and take a leap and put their home up for rent and go buy something else. And this is not an unseen thing. We were having a discussion today with a client who did just that, put her home up for rent and is buying something else.
Yeah. Total home sales would jump to 4.8 million. Fueled by a gradual recovery in existing home sales, Fannie Mae said a modest economic downturn will cause a shallow decline in new home sales, though the contraction won't diminish construction volumes in the long run. The agency expects price to continue appreciating, albeit at a slow pace, citing October survey at forecast 2.4% growth. Price growth 4.8 million is a substantial increase in homes sold. It's like 20%.
Right. So that would be a really robust year for us, particularly on the heels of last year that was pretty lackluster when it came to the number of transactions.
Here's my prediction. I predict in April, their predictions will be substantially different. Nobody, though, is predicting housing crash, except for people with YouTube channels.
Except for us.
And us. You know what's funny is some of the crash bros, I'm starting to see they're not taking down their videos where they've been wrong. It's amazing how many people have commented saying, I mean, we should go back and look at the comments from like 3 years ago and 2 years ago where people said, oh, in a year, you'll be proven wrong, like in 2021. I just downloaded and saved this video so when you erase it, I can show it to people showing how wrong you were. And I'm like, where are they now? Because home prices are up from then. They said they would crash 40, 50%, and here we are.
Well, we're not going to rub their noses in it.
Yeah, we will. So I predict by April, you will see revised, especially if interest rates drop substantially. I think we'll have a better idea in April how the rest of the year is going to be, because it should, that's kind of the hot season for home sales. And
right. I think you're going to see a lot of revisions in March because those are going to be the forecasts for the next quarter.
Yeah, I think so.
Okay.
Yep.
Anything else?
No.
No. Okay. Did you have fun? Did we entertain you, make you laugh? What happened? Leave us your real estate related comments. We appreciate them. Please admire Todd's wardrobe. He looks smashing.
Wardrobe. I put the
absolutely smashing
silk on again.
Yes. So we appreciate you watching. Please remember to like the video, subscribe, hit the notification bell, share the video, give Todd fashion tips, and we'll see you on the next video. Bye.
Bye.